Kitco Mining's special coverage of the Deutsche Goldmesse is brought to you by Defiance Silver.
Stop trying to guess where gold prices are headed, says Egon von Greyerz. Rather pay attention to currencies. Egon is managing partner and founder of Matterhorn Asset Management. Egon, thanks for sitting with Kitco.
Good to be here. Thank you very much, Michael.
Let's talk about where we are right now. So we've had these 10 consecutive interest rate hikes that have come from the Fed, and then we've started to see some banking sector wobbles. Maybe I'm understating it right now, or I should say rather some failures that have happened right now. What's happening?
Well, what's happening is that what I always expected would happen, and we've been into gold for 25 years now, from the point of view only wealth preservation, insurance, not as a speculative investment. And because I saw 25 years ago that we would reach at the end of this monetary era. It doesn't happen overnight, and it's taken longer than I expected. Nevertheless, it's happening. And right now, we're starting the exponential phase. It's starting to accelerate. So everything that's happening with interest rates and banks, that's just the beginning of it. The banking system will not survive in its present form. Currencies will not survive. Interest rates will continue to go up. Central banks will lose control of interest rates. The market will determine interest rates. Long end of debt will sell off, and that will pull the short rates up also. So that's what happens at the end of an era. It's going to be tough times for us in the world, but there's no change. If you look back in history, it's happened every time in history. No money has ever survived, as we know in history. So this currency system is not going to survive either. And it's quite exciting from an intellectual point of view to actually see this happening in front of our eyes, however long it takes. But from a human point of view, it'll be horrible, of course.
Explain that to me. What do you mean by a monetary era and then that it is ending?
Well, monetary era, let's just take the starting point as 1913 and the Fed, which is when private bankers started to control the monetary system and buy a so-called private central bank. And then gradually money has been borrowed and printed at an accelerating rate. And then after 71, of course, when Nixon closed the gold window, then it's starting to go exponential. If you study history, we know that no currency has ever survived in history without fail. And therefore, this one will die too. And, since 71, we don't even have to go back to 1913. Since 71, every single currency in the world has gone down 97 to 99%. So we only have 2-3% left. But those 2-3% are 100% from now. And that's what we're going to see in the coming years, whether it'll be 2 years, 5 years, or longer. I can tell you afterwards, but because it's impossible to forecast the exact timing. But it's happening in front of our eyes. So banks going down now, the little banks start to go down, the bigger ones will follow, and the money printing necessary to save them. And then you're not going to save anything because you can't repay or debt by the same token as created the debt in the first place. So therefore. Sadly, there is no solution now, and it's very sad. But it's happened every time in history, so this will be no different. It's just that it's global this time. That's never happened before in history, so it will be a lot worse.
You were mentioning that there has been the rise in BRICS, Brazil, Russia, India, China. Is there rotation into that, or why do you suspect that this bloc, or I guess this currency, is actually going to be stronger right now?
Well, part of this fall of this is not fall of the world we're looking at now. It's the fall of the Western monetary system, the dollar-based one that dominates, especially Europe. Yes, it does. Of course, we have seen the dollar being the trading currency for the whole world also. But now as they come under more pressure, the US now dictates what the rest of the world can do. And the last was of course, we had the petrodollar, which is gradually disappearing now, and all the BRIC countries and Saudi Arabia, etc., they're gradually turning over to the yuan and other trading currencies. That will take time. It's not going to happen overnight, but that's inevitable. Nobody wants currency that the central bank just can block overnight, and if you have deposits in dollars, and stop you using the SWIFT system for transferring money, etc. Nobody trusts the US anymore. And then when the US starts also, which it always has, dictate to Europe, you must do this, you must sanction the rest, you must sanction Russia, follow us, etc. That's destroying Europe at a faster rate than ever, because it's disastrous what Germany and then the rest of Europe has agreed to from the point of view of energy and from the point of view of inflation. These sanctions are going to be the final nail in Europe's coffin, of course. But politicians, sadly, in Europe are not standing up to the US. And we're seeing the fall of, we're right in Frankfurt now, we're seeing the fall of Europe in front of our eyes.
You said your presentation here at Deutsche Goldmesse that guessing what the price of gold is going to be is a mug's game, but rather you have to focus on currencies. Why do you have to focus on currencies rather than where gold is headed?
Well, sadly, the only way that we in the West or in the world measure wealth is in money terms, but that's a total fallacy. How can you measure wealth in something that is being debased on a daily basis? Of course you can't. As we said, gold has never gone up in history. Gold is just constant purchasing power, and therefore, the fact that currencies have gone down 97-99% against gold in dollar terms or in euro terms, that's irrelevant. In purchasing power terms, gold is the same as it was 2,000 years ago. So therefore, we can't measure our wealth in something that is just disappearing in front of our eyes, which is the currencies. So that's why gold will now take a much greater role in the monetary system as it transfers to the East. We don't know how yet, but it's very clear that the countries are now where the power is moving over to, China, Russia eventually, I think also. These are commodity-based countries. And they actually are holders of gold, probably have a lot more gold than the US, although officially they don't, but unofficially they most probably do. And that's where the power is going to be, the monetary power also.
Help me out. What do you mean by a commodity-based economy? I think you're making that distinction between like China, for instance, versus other economies which might be more service-based.
Yes, no, China is not, but if you look at China and Russia together, no, China is not commodity-based, of course, although they are actually the biggest gold producer in the world.
Manufacturing-based?
Manufacturing-based they are. They got real products. Russia has the biggest natural resource reserves in the world at 85 trillion. They are going to be, one day when they're properly managed and properly governed, Russia, it's going to be a major economy. And whether Russia and China are going to work together or not, but you have the manufacturing on the one hand in China, and you have the resources in Russia. And then you have the whole of the SCO, the Shanghai Cooperation Organization, which is all these Asian countries. That's going to be very powerful against a debt-laden West.
Mm-hmm. Speak about that debt-laden West. Look, the Golden Klein crowd has been worried about debt prices going back to Bush, Obama, Trump. Is there something that's different about the debt right now? Is there something that is actually that is meaningful, that might actually kick something off?
Well, it is, because it's now, in the final stages of an era, everything moves exponentially. It's like filling a stadium with water. It takes 45 minutes to fill it up to 7%, and then the last 5 minutes goes from 7% to 100%. And it's the same with the debt. The debt is going to now explode and then eventually implode, which explode means that we now have 300 trillion debt in the world, plus unfunded liabilities, plus, but I add derivatives. We have probably 2 quadrillion derivatives. That's not officially reported because a lot of that is in the shadow banking system. But nevertheless, those derivatives, a lot of that is debt actually. And a lot of it is very interest sensitive also. And I think derivatives will eventually translate into debt. because the derivative system is going to fail. When counterparty fails, the growth remains growth. Everybody nets it and they say there's nothing yet. Really, the risk is not very big. But growth, in my view, is going to remain growth. And that means that central banks will have to print that money too. And this is why, debt's going to grow exponentially at the same time from 300 trillion to maybe a couple of quadrillion or more. And then at the same time, interest rates are trending up.
Your analogy when you're talking at the presentation was how long it would take for a drop of water to actually fill up like a large stadium.
Yes.
So you see it's something that is hardly discernible at the start, but if you're doubling that at certain frequencies, at the end you could see like nothing is happening for most of the time, but you're going to be filling the stadium in 55 minutes, and then that's going to probably happen in the last couple of minutes.
Exactly. And you just take, for example, hyperinflation as an example in any country, but you take the Weimar Republic, it went gradually from 1919 to the end of 1922, and then from the beginning of 23 to the end of 23, inflation went from maybe 1,000% or 1,000% to millions of percent, basically. It just happens all of a sudden. And that's these exponential moves that you see at the end of an era. Of course, central banks will try to control it. Of course, they will try to introduce digital currencies and say that we put the debt here aside. The debt is really forgotten. We don't have to worry about the debt. But that's nonsense. You cannot write off debt without at the same time writing off the other side of the balance sheet, which is assets. So if the debt disappears, so will the asset values also, and the whole system will implode. And that's going to happen in the next few years, sadly.
Now, Egon, we're here at the Deutsche Goldmesse, which is a resource and mining conference. What has been a lot of energy that has gone into the mining sector has been energy transition and the miners that are serving that. So you're talking about the copper companies, you're talking about all of the energy transition metals. Even the silver people are on this right now as well, too. If you're looking at a silver presentation, they're going to be starting with cars, dashboards, and photovoltaics before they actually talk about currency. Wouldn't you say that energy transition, wouldn't you say about kind of the investment that's come into mining, it has been a good thing for the sector?
Oh, yeah, absolutely. It's very good. Sadly, the sector has done extremely badly for 40 years. So we are, of course, looking at precious metals from a different point of view. We are not experts on the mining side at all.
Yeah.
We have a few stocks personally, but as a company. But generally, we are into precious metals as a form of wealth preservation and insurance, and therefore we haven't really been interested in investing in the mining sector. Although, of course, at some point this will explode also upwards, and there's tremendous potential. And as you mentioned, silver. Silver will be gold on stilts, of course, because at some point, when it starts moving, and I think we're very near now to proper breakouts in gold and therefore in silver also. And then silver will move twice or three times as fast as gold. There's no question about it. But sadly, when there are corrections or down moves, it moves also twice or three times as fast. So therefore, it's a very volatile investment, and it's not for widows and orphans, silver. But I think right now, silver holders will be rewarded because what's going to happen in the precious metals market.
Egon, what's your concerns about the drive into energy transition and moving away from petro?
Well, you know that today fossil fuels represent about 83% of all energy. And global warming is happening right now, although I think we are at the end of that cycle. In my view, and my very strong view, the whole of the global warming movement and CO2 fear is driven by political intentions rather than by actually what is happening in the world. I'm a firm believer that energy or cycles in weather is what drives actually the temperatures in the world, rather than human beings producing a certain amount of CO2 that is destroying the world. We cannot, if you do a projection, the growth in wind power and the growth in wave power and all the alternative renewable energies, it's going to be so slow because you need fossil fuels to produce all of that too. And still, even if you do use fossil fuels to produce all the machines and all the equipment to make renewable energy, you still can't store it. And that's why the forecast I'm looking at is that fossil fuels are still, without fossil fuels, the world is not going to survive. It will absolutely collapse. So all these movements of gluing yourself to the road or stopping traffic, sadly, is going to stop the world and the whole of the industrial system in the world. So in my view, it has to fail because otherwise we are not going to be able to live. We're not going to have cameras or computers or anything if we don't have fossil fuels. So I hope it will happen gradually, the transition from fossil, but that will probably take 100 years or more. It's not going to, in the next 50 years, fossil fuels are still going to be a major percentage of our energy, the majority. There's no question about it in my mind. Whatever political will there is to change it, but it won't work. And until then, the cost of fossil fuels is increasing, and the cost of producing energy from fossil fuels is going to increase, and therefore, actually, even it'll have a bearing on the precious metals also, because the cost of fossil fuels will actually make precious metals more expensive. And so we'll see that, but I believe anyway that they will move up because of what's going to happen in the world, of course, for the precious metals and mining stocks, because we're going to see now an explosion over the whole of the energy sector. And that's why when precious metals will start to actually take a major role in both the investment sector and in wealth protection sector.
Egon, you're worried about the financial system and what you see in terms of what's breaking right now, and you see gold as being something that people can hold right now as protection against that. How do you view that right now in terms of how people are adopting gold? Are enough people adopting it, or why is it being something that is it something that needs speeder uptake, or what's the issue right now?
No.
Yeah.
No.
Yeah.
Nobody's adopting gold. It's still only 0.5% of world financial assets. You know, I've been standing on a soapbox for over 20 years, trying to explain to people that, you know, we're going to have tough times and you need to protect your wealth. We don't see it as an investment. We see it as a pure wealth preservation, especially gold and silver to a smaller extent. But, you know, I gave a speech at my daughter's wedding 20 years ago saying that buy gold. Nobody did, of course. Nobody's buying gold today. But if you speak to somebody, when I say nobody, it's 0.5% of world financial assets. People still hope that stock market will come back and property market will come back. They won't. This is the end of an era. These bubble assets, you know, I talked about in my presentation, the great collapse of everything, the everything collapse. We've seen the everything bubble. We're now going to see the everything collapse, i.e. all the bubble assets, stocks, bonds, and property are going to come down dramatically, especially against gold and precious metals. And so we will see a major shift in coming years from the bubble assets to real assets, which will obviously include gold and silver. So there'll be a re-rating of the whole of that precious metals area. And rather than 0.5%, it will probably go back to, let's say, 5%. It depends on what the other values do. If all assets come down, of course, it'll automatically metals will be higher as a percentage. But nevertheless, the re-rating is coming now, and will be a massive shift of wealth from paper assets, bubble assets, to real assets. And I'm not saying this because we're holding gold or silver. I'm saying it because it's inevitable end to a paper money era and fake money era and false money and false values. Everything we see here around us in Frankfurt, the tall buildings, etc., it's only because of printed money. Otherwise, we wouldn't have been built. And this money is going to inflate or deflate totally in coming years, the value of this money, and therefore all the assets also. and therefore we'll have a gradual shift. Of course, precious metals won't take over the world. They will still be only a minor part, because you cannot satisfy a higher demand in precious metals by more production, because there won't be more production. 3,000 tons of gold every year. It's not going to be more. So the only way to satisfy a demand which inevitably is going to come is by higher prices, of course. Because when institutional demand comes in, rather than paying $2,000 an ounce, they'll pay $20,000 or whatever an ounce, because they need gold in their portfolio to inflation protect it. And I see that coming in the next few years. So there'll be a re-rating of the precious metals. It's inevitable.
Egon, thanks for your time.
Thank you, I really enjoyed it. Thank you.
My name is Michael McRae here at Deutsche Goldmesse for Kitco Mining.
Kitco Mining's special coverage of the Deutsche Goldmesse is brought to you by Defiance Silver.